So what if I can tell what's the next candle likely to be by just studying how the candle is forming? And so if the market didn't fall back down to the opening price, and that's likely the market is going to go bullish, and so vice versa. Okay. So when I first started trading, I remember I told myself, how hard can it be? Because the market only going up, down, or sideways. And so, it's not that complicated, right? Then soon I realized it's not that easy. So I started to study everything I can get my hands on. So like RSI, MACD, moving average, pretty much you name it, I studied it before. And after years of study, I realized that maybe I wasn't too far off when I first started, because the market truly is only going up, down, and sideways. It's not that complicated. So maybe I was right all along. So I started looking to the candlestick pattern. So things like a doji candle, shooting star, engulfing candle, things like that. The fundamental logic of the candlestick is look on the higher time frame candle, just like those 1 or 2 candle will reflect the price action on the lower time frame. For example, the engulfing candle, in the lower time frame, engulfing candle is just lower low and lower high. So even though just like the candlestick pattern is answer a lot of my question, but it doesn't really answer how the candle form. So the candlestick pattern is based on the after the candle is formed and how likely the market going to do next. So what if I can know what happened while doing the candlestick form, what's likely to happen? Because interestingly, one candlestick is formed with the 4 things, open, close, high, and the low. So if the market closes above the opening price, this candle is going to be the bullish candle. And if the market closes below the opening price, it's going to be the bearish candle. So you might think that's a common sense, who don't know that's the case, right? So what if I can tell what's the next candle likely to be by just studying how the candle is forming? So if I know these candles is likely to close above the opening price or below the opening price, and then I can make my trading decision fairly easy. Just like if I know likely the market going to close above, I'm just going to do long. I'm not going to short the market. So with that being said, I want to dive in on to study how the candle form. Just by thinking about that, there's a lot of questions popping in my head. And just name a few. How many times price cross the open before it decide to the candle direction is going to close? Which wick happened first? Upper wick or lower wick? And does that have the correlation on what's the candle is going to do? Just like when the wick is happening. How long does the direction confirm, before the closing of the candle, and things like that? Just there's a lot of question in my head, and obviously I cannot answer all the question in one video. So today I kind of want to see, just about the opening price. Just how many times the price will cross the opening price before these candles close. So I get some data with the Ethereum and the Bitcoin. We get a 48 4-hour candle, and we're going to use 15-minute chart and to study how those 4-hour candle form. So after not too long, this is what I found. So just like 48 candle with Ethereum, there's a 43.75% didn't cross the opening price at all. So there's a 0 crossing. And 14.58% is a crossing once, and 20.83% is crossing twice, and 20.83% crossing more than 3 times. And with the Bitcoin, there's a 37.5% and is a candle didn't cross the open, and 20.83% crossed only once, and 29.17% crossed twice, and it's only 12.5% is crossed more than 3 times. So I was pretty surprised by the number. The opening price didn't get violated more than, it's almost more than half. So let's just dive into the chart and let's just to see, just some example on 0 cross, 1 cross, 2 cross, and so maybe we can see some pattern and be useful to your trading. So let's just start with the Bitcoin and with the 0 crossing. So the number 3 is one of the 0 crossing. You can see on the market open right here, and market go up and come back down and test the opening price, then go up. And the 21 and the 22 is also the 0 crossing. So the market come down and just like go up a little bit and then just like form the wick right here and then close. And the other one is the market just never come back and just until the end form the wick. And so you can see just like when there's a zero crossing, and the directions usually is really clear, and just like the market is just going to go down. It's not going to be choppy like that. So with the one crossing, just like the number 5 is only one crossing, and so the market shoot up and so form an upper wick and break the opening price and just go all the way down. And so 14 as well, just like the market just shoot up, consolidate, and just have a really huge move down, break the opening price, and the market just keep going down. Zero cross and one cross, their direction is all pretty clear. And so let's just see two cross, and with the two cross we will see more uncertainty. You can see the market just like open, go down, and just cross above and below, and just close down here. And just like that, this is pretty much is a doji candle. And 30 is another two cross. The market come down and go up, break the opening price, and come down and close below the opening price. So the 12 is 5 cross, so the market was open, come down, and just go up, break above, come down, and just like consolidate right here, and just 5 crosses before the markets go down. Then the 18 is 4 crosses, just that the market come down, go up, come down, and go up, and come down again. 2 or 3 more crosses, and just like we start to have uncertainty, just like the market maybe just consolidate. So with the 0 and 1 crosses is more than 50%, and Ethereum is also more than 50% if you add 0 and 1 crosses together. And so with that information, is really going to help us to understand, just like maybe opening price is something. It's going to be useful if we can have the opening price be our indicator to know, okay, so where's the market is likely to go. So the way I'm going to use it is to just like if the market already have a 1 or 2 crosses for the open, and then the market stay above the market, and so I will assume the market likely to close above. So with all those info, you might think, okay, so how does it going to apply to my trading? Then for me, just like what I learned from this study is opening price can really be my defensive line. It's like when there's 1 or 2 cross already, and the market is likely to heading up or down. And so if the market didn't fall back down to the opening price, and that's likely the market is going to go bullish, and so vice versa. And of course, this study is not perfect, because we didn't really consider market condition. Maybe just because from the April 2nd to April 10th, they are trending. So there's a lot more candle didn't really cross that opening price. And also just like this is only the small sample size, 48 Bitcoin, 48 Ethereum, it's pretty much nothing. But that's just kind of give you guys the idea, just like how opening price interact with the actual price. We still have a lot of questions we didn't answer. For example, just like kind of interesting to see, just like how, like when is those crosses happen, and it's going to happen in the early stage of the candle form, or it's going to happen, at the end of the candle form. And also the wick, just like it's going to happen early on, or it's going to form later on with the wick. Because if you look at the chart, just there's pretty much every single candle have a wick. If we can know those things, we can really play with it a lot. So if those questions interest you, and please leave a comment down below, and just I need to try to figure out, what's the proper way to study those. Just I might need to learn Python to get all the data and perform all the studies, so to give you accurate. But I'm not a programmer. I don't really know coding, so that will be another challenge for me. And but I'm willing to learn. Just like I'm open to it, and it's just like it's going to take time. But it's so this study is kind of just like to kind of open the door to kind of invite you guys to think about, just like to how the candle form. And if you have any question, just let me know, and you can just add me in the social media down below. And yeah, so just like I will talk to you next time. See you.